Hello, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst with Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on nickel exploration and development, as well as potentially a little gold today. We will hear from Russell Bradford, Managing Director and CEO of Aston Minerals Limited. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Aston webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined in their corporate presentation, and that can be found on the company's website, astonminerals.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Aston. So we have Aston presenting today, the company, which is led by a management team with significant experience in the industry, is focused on its Edelston property in the Timmins area of Ontario, where it has delineated a large bulk tonnage nickel deposit. As well, in their back pocket, they do have a gold resource as well on the property. With that, I now turn it over to Russell to update our audience on the company.
That's great, Tim. Thanks for that introduction, and welcome everybody to this presentation. This presentation can be found on our website as well. So for reference, if people want to go back and go through this, it's on our website as well. So I'm going to take you through a couple of slides. I've been in the job now for just shy of a year. So I'd like to take you through the work we've done this last year and what we're thinking about doing next in terms of the development of the nickel project. There's a disclaimer. You can read that at your leisure, and Tim's taking you through some disclaimer information there as well. So the project highlights, I guess, coming on board, I was introduced to this nickel project by Dale Jin and Tolga Komova at PDAC last year. Myself, Peter Breeze, and the management team, we went off and did due diligence. These 6 points here are really the highlights of what we found. So we saw that there was a maiden resource of nickel, 1 billion ton at 0.27, all sulfide nickel. Separate to the nickel, there's a gold deposit, 1.5 million ounces at a gram per ton. We were given the opportunity to come on board as MD. I could change the board around, so we felt that that was an appropriate thing to do. If you look at there's two First Nation groups on the property, and there's all agreements in place with the company for that. It's in Ontario, just south of Timmins. A great place to operate. Ontario, big mining state like WA in Australia. So we felt that, there's certainly an appetite for mining in that part of the world. And then Canada. I mean, Canada's just like Australia, and Canada's been very vocal about critical mineral policy and critical mineral supply and guarantee of supply. And nickel's been earmarked as one of the 6 critical minerals in their critical minerals policy. So we looked at all of this and we said, at this early stage, we believe there's a good opportunity. It's nothing different from what we've done before. We can come on board. There's good fundamentals for this project, and we can then start to put a project plan together. So this is the board and the management, myself, I'm a metallurgist with plus 30 years experience, been in the game my whole life, worked on mines, run big nickel mines, big nickel smelters. Peter's been around. I've worked with Peter for over 25 years. Peter's built and managed big mining companies. Tolga is an entrepreneur, very successful entrepreneur here in Australia. Rob Jewson as well, great technical guy to have on board, also an entrepreneur. The management, we've got Carl and Rob based in Canada. I'll be moving to Canada actually on Tuesday. So I'm based in Perth, and I'll be moving to Canada, based out of Toronto, and we'll get a bit more into that. But essentially, it's got to a point where we need to now be based in Canada on this project. And if you look at our partners, essentially all our service providers, our technical consultants, tier one guys, all understand the mining game. What is interesting about this group of people, a lot of them are the same, let's say, consultants that have helped Canada Nickel develop their Crawford deposit to, the stage that they're at the moment, which is, they've gone beyond DFS. They've actually gone into detailed design. So companies like Corum, Asenco, these are the guys who have done their feasibility work, done all their metallurgical development. So the same engineers, the same metallurgists are working on our project as well. So we picked up a lot of learnings from these projects, as well as Dumont, Crawford, Canada Nickel, and ourselves now. Just to mention, we have two First Nation groups, Matachewan and Metalogy, on our properties, and we have agreements all signed and in place. We are in Timmins. Timmins is a very mature mining district. So I know that the First Nation groups there, as well as the mining companies, have worked, well together there for a long time. So I think we're very fortunate. We've come on board and we've inherited that history, and it's allowed us to continue that relationship. A mention for Rob Hull, who's our First Nations manager. You can see there the top picture with Rob and Stan and Tim, Peter and myself. And then earlier this year at PDAC with Rob and Jennifer and Julie, we had lunch together at PDAC. It was a great discussion, and I'm looking forward to coming through to Canada next week and building on that relationship. So I think we're very blessed. And obviously, we don't take anything for granted on this at all. I mean, we're going to work together on a lot of things together on our development of our project. So just to talk about our location, for most people, it talks about Timmins. When I describe it here in Australia, I say it's like Kalgoorlie on steroids. I mean, it's the center of a big mining, service providers. There's huge mines left and right of where our deposit is. We're approximately 50k south of Timmins. The Crawford deposit, the Canada Nickel Crawford deposit, is about 50k's north of Timmins. Canada Nickel also own quite a bit of land around our property as well. What's interesting, we're on that Cadillac Larder fault, and we'll get into the gold, but essentially, if you look at Aston as a company, we were a gold company. We inherited a gold deposit, which we continued to drill. When that was drilled, then we stepped over the fault and we found the nickel, and then went south, and then we have essentially a gold and a nickel deposit on our property. But you can see the first time I went to this site, it's probably the most, unisolated area that I've ever worked in. You drive to work to the deposit from Timmins, 50k's on a sealed road. There's two hydropower lines coming straight through the property. Sudbury's about 220k's down the road, the 2 nickel smelters. You've got Timmins, hotels, housing, labor, all mining service providers. So I think we're very blessed where we are. It's not remote by any means at all. And as I say, it is probably the most unremote place that I've ever worked in my 35 years in my career. So we're very lucky there. Corporate snapshot. When we came on board in May, we did a raise in July. We went and raised $11 million. And I'll talk about what we've spent some of that money on. The long and short of it is, as we came on, and you can see there from May, as all the news started to come out of Indonesia about flooding the market with nickel, there was a lot of institutions on our register that decided to sell. In fact, 3 institutions that happened. And we've had this decline of our share price to a point now that our market cap is around about $16 million from a high of close to, to 100 million. Look, I look at this and I think it's just a classic project curve. You discover something, everyone gets excited, the share price goes for a run, lots of people climb in. It's almost like a psychological thing. People buy at 8 cents, 9 cents, 10. And then the reality bites that, you've got to now get into the boring bit, and that's the project development. But that's the technicalities of putting a mine and a mine development together. We're in that phase, and I think there's probably been a shift of investor that's made some money or has realized that there's a loss. We've flatlined now. I think we're going to start to see people looking for nickel stocks, and it's certainly you're reading more and more about that. But not only looking for nickel stocks, but stocks that are undervalued like ourselves, and have good management and are dealing, are delivering good quality work. So I would expect this price over the next 6 months to start to change quite significantly. But let's see. So that's the corporate snapshot. And a very important point on that as well is we have over 5 million in the bank. We'll be spending maybe 2 more this year on work that I'll talk about just now. But there'll be no raise coming up this year. And certainly with 3 million still in the bank, we won't be looking at doing a raise next year as well. So there's no opportunity someone coming in and, being tapped up for contributing to a raise certainly in the short to medium term. That won't happen. Just to talk a bit about our experience, this is a team, Peter and myself and the guys in Cape Town. We were part of the Linor executive. Linor was TSX, ASX listed nickel company, started in 1994, was sold in 2007 for $7 billion. And we had 7 nickel mines in our portfolio when we sold to Norilsk Nickel, and doing just over 85,000 tons of nickel a year. So a big nickel global operation. That same team then went and developed a uranium project. I was the project director for Mantra, and we sold that company for $1 billion. That was a uranium asset in Tanzania, also TSX listed. And then the same team went off and developed and built a gold mine in Ghana, which is a 230,000 ounce a year gold mine, 5 million ton mill, big gold mine. That was JV'd with Goldfields, and that is now Galliano Gold. And so the name changed from Asanko to Galliano Gold, which is also TSX listed. So I guess this slide is trying to say to people, if we look at the Boomerang and if we look at the nickel project that we've got on our hands, there's a lot of pieces of the jigsaw we've got to put together. But I think it's fair to say the team that we have on board has the experience, certainly has made a lot of money for people around the world, and in Canada being TSX listed out of those companies. But if you look at those pieces of the jigsaw, they've all got to kind of be looked at and focused on over a number of years, put them together, and that's eventually how you get a mine. Just a bit of 101 on project management, really, and development. But I suppose all of this stuff takes time, it takes money, and it takes a certain skill set to put this jigsaw together. I want to just get into, and please excuse me if I'm preaching to the converted, but being based in Australia, I've been spending quite a bit of time. I use the word with respect, educating potential investors here in Australia about the nickel market. And I guess where I'm coming from is not the nickel market as such, but more the fundamental differences between Australia and Canada. And the more I go to Canada, the more I see this, the more I learn this, the more I read about it. So I'll spend a couple of minutes on this. I think in the nickel space, we can all agree that Indonesia has been picked as a, let's say, significant guaranteed supply of nickel for the Chinese EV space. If you look in 2015, Indonesia supplied 6% of the global refined nickel. That is over 50% now. And we know the expansion and the, let's say, the development of the Indonesian nickel process and production facilities has been, incredible. It's been outstanding. So hats off to what's happened there. If you look by 2030, that's going to probably be banging on 60 to 70% of the world's nickel will come out of Indonesia. I mean, you could look at this and say, well, it's dominance in nickel that we could maybe relate back to the DRC with cobalt. Well, that brings its risk in supply. We see Indonesia as a swing state between China and the US, and we know that Indonesia has dialogued with America on potential IRA participation. I think that's going to be difficult to do based on ESG credentials, and I don't really want to get into a discussion about clean and dirty nickel, but I think having Chinese equity and Chinese sponsored nickel processing development, that nickel is certainly earmarked for China and for the cars and the batteries that are getting made by China. And I think with IRA, we're starting to see this bifurcated market in the nickel space. If we look at the next slide, this just talks about some of the corporate investment that's gone into nickel, but I want to quickly touch on this. So when I look at Canada and I look at not only the existing automotive industry that exists in Ontario and other parts of Canada, but I look at how those automotive industries are being converted, and I look at how there's now EV battery factories, gigafactories being built in Canada. I look as well then at companies like Canada Nickel, like FPX Nickel, who have started to now, achieve significant, let's say, investment through OEMs, Samsungs of the world, Sumitomo's, and you can see there's clear evidence in Canada that companies are looking not only to invest in Canada, but looking at the downstream mining supply, and we talk about this guarantee of supply. Well, when I look at Australia and I look at the classic, let's say, nickel model here, mine the ore, sell it to Campbelder, and BHP will take care of the rest. In Canada, it's certainly different. You've got this automotive industry, you've got the EV industry that's being developed there. I think the governments are being very, very, let's say, I won't say aggressive, but certainly being very promotional about Ontario being a major source of nickel for this new industry that's being developed. And you can see it. I mean, Honda just, 2-3 weeks ago announced over a $15 billion investment in Alliston in the automotive factory. So I look at Australia, and we don't have these opportunities that we see in Canada. Also, we have like the Critical Minerals Innovation Fund, and also the Critical Minerals Infrastructure Fund in Canada, which is there for critical mineral development. And this slide here, these slides are actually developed by Benchmark, which is Nickel Intel out of London. Essentially what it's saying is that the left-hand graph there on the y-axis is the battery production, the gigawatts. So you can see Japanese and South Korean producers. The black bar on the top there, that is now growth development in North America. And you can see South Korea and Japan, 250%, 3,200%. And the graph on the right clearly shows between 2023 and 2030, the 4 major battery suppliers and manufacturers in the world, how their expansion plans are being rolled out in North America. And again, I think this supports getting back to the Canada Nickels, the Astons, and other nickel companies in Canada. They can be part of this growth. It's happening on their doorstep. This is not something that's happening across the pond or, in another country that maybe, we're not allowed to sell our nickel to. This is happening right in the state of Ontario in Canada. And again, just looking back at Australia and nickel producers here, I sometimes feel that, this would be a fantastic opportunity for Australian nickel producers if we had this on our doorstep, and we don't. So I've spent a lot of time talking to Australian investors, and then obviously the learnings from Canada. So I think we're quite fortunate and very blessed in Canada. We have this supporting industry that helps with the development of nickel projects. Let's now just move on to Aston itself. So let's touch on the nickel. What Aston has, we did some drilling last year. The maiden resource was announced in March last year, was just over 1 billion ton at 0.27 nickel and 0.011 cobalt. We did some targeted drilling last year, and we've increased that now to the number that you see there. So we actually announced about 5 weeks ago an update to our maiden resource. So this is our latest resource. We've just done shy of 33,000 meters of drilling on our resource, and we have 2 sections to the resource. We have the B2 zone, which is in the north, and then we have the Bardwell zone, which you can see where a lot of the red is. The red shows the classification, and the green. So the green is the inferred, the red is the indicated. So I'll just move to the next slide. So these numbers here just show you the degree of the additional indicated mineral resource that we've recently published. So our indicated resources increased by 44%. So essentially, we've just got over 630,000 tons of nickel sulfide all in indicated now, which is significant, and it's all in the Bardwell zone. So I think it's fair to say, as part of our, let's say, understanding of the mine, understanding where the pit is, we can start to see now a good area within the ore body where there should be a pit that would be able to focus on putting together through a mine schedule and future drilling plans. So the Bardwell zone is certainly going to be the area for continued focus on drilling and for future understanding of the metallurgical performance. Up in the B2 zone, last year what we did some extension drilling, and that resource did extend by 500 meters. All of that material now, and we went down to over 500 meters in depth. It's open on strike, it's open on depth. And we made a call. We said, well, let's stop drilling now. We've got plenty nickel there. When we do infill drilling in this area, we know that we'll convert, this inferred into indicated. But as it stands, we wanted to focus more on the Bardwell zone. And this essentially, what we did last year, we moved the rigs from B2, we took them down to Bardwell, and we did short hole drilling. And effectively what we did with that short hole drilling, we did infill drilling, and the short hole drilling, we brought the resource up to surface. So we have this glacier till on top, which ranges between 20 and 40 meters of loose gravel. Remove that with a dozer, and we straight into the hard rock. So that essentially is our latest resource, and there you can see the numbers there. But in indicated, we've got over 630,000 tons now of metal in nickel sulfide, and inferred just over 500. So with the drilling that we'll continue to do there in the future, we'll easily have 1 million tons of indicated and measured in this Bardwell zone. And if I look at this, and with the work that we'll start to be doing now, you can clearly see with that indicated, this is where the pit will end up being. And this is interesting because, as I say, when we came on last year, we had a large inferred resource and not quite sure where anything would be. Well, now we can see the definition of where the pit will be, where the kind of mine infrastructure will start to be, and where the process plant's going to be built. So it's been important exercise, not only from a resource definition perspective, but also starting to get your head around the layout of the mine as well. So I've been very pleased with this exercise that we did, and this was announced about 5 weeks ago. Let's touch on the metallurgy. So one of the things when we came on board last year as well, we had this large inferred resource, and the big question was, and it should be on any ore body, particularly when it comes to base metals, how much of this large resource can we recover? Is it all recoverable? Is there other things that give it a better recovery? Is it a function of other elements? Is the pay metal locked up? Is it refractory? Is there nasty elements with it? Is there arsenic? So we had to go and answer these questions. We'd already done 28,000 meters of drilling on the ore body, so there was plenty core. So what we did, we actually went and took a lot of that core from selective areas of B2 and the Bardwell. We went to Coram, which is the same lab that Canada Nickel used with their metallurgists. And we brought on board Greg Lane, who's been very involved with Dumont, Mount Keith, and with Canada Nickel. And we ran a significant number of rougher cyto tests to understand the response, not only to the nickel grade, but also to the sulfur grade. We eventually got to a point running, a large number of rougher samples that we generated this new curve. So the blue line that you see there is the improvement on the recovery from the rougher to what was announced in 2022. And more importantly, what we found was recovery is not only a function of nickel, but it's also a function of sulfur head grade. And also it's a function of iron. And this gets into discussions around alteration of dunite, the serpentinization, and what that does to the sulfur, what happens then to the nickel and the sulfur ratios, and how the nickel, how the iron gets altered to magnetite, And what essentially we're doing now is creating a geometallurgical model of our ore body. It's very important that because it not only guides you on mine schedule, it not only guides you on process, but it on process flow sheet development, but it guides you as well on future drilling. Because whatever the response we get from those drill core from the met flow sheet development, that gets fed back into the ore body, and that's how we map out this geometallurgical, let's say, map. So this was quite a significant amount of work that we've done. This was announced about 7 weeks ago. And then about 3 weeks ago, we did announce a series of lock cycle tests that we did. This is an example where we fed a head grade of 0.35. We got a 59% recovery, a concentrate grade of 29% nickel. We do see some nickel. Well, I mean, 95% of our nickel recovery comes out of rougher, cleaner flotation. And then we do see between 3 and 5% additional recovery coming through magseps, and that's aurorite. So we've done quite a lot of QuemScam. We've done a lot of cyto tests, and we got to a point now that we were actually quite confident that we could put a flow sheet together. And this is now the flow sheet, and we announced this about 3 weeks ago. Now, this is quite an important stage for the company as well, because all of the new core that we drilled at Bardwell from that indicated resource, we have geologists on site right now busy compositing downhole composites for future test work. But what will happen is the core is being, let's say, individually composited based on sulfur and nickel grades on each downhole drill hole that we did. That core then individually will be fed now into this flow sheet. The flow sheet is fixed. The different core that will feed into the flow sheet will vary based on nickel and sulfur grades. And what will come out the back end of that will be then various degrees of recoveries. Those numbers then will go back into the ore body. That's that geometallurgical relationship we talk about. When it goes back into the ore body, we'll be able to not only understand the size of the pit and the shape of the pit, but also future drilling that's required to go and target those areas that give us the best economic outcome. So this, I sometimes refer to it as it for investors, the boring bit, but actually as developers and metallurgists and project guys, this is very important. It's exciting. It really gets to a point where the project, the ore body, starts to talk to you. And when that happens, you can really start then to put the meat around the bone and put a project together. And as a company, I think, with the drilling that we've done, the met work that we've done, and the point where we're at now, where we do have a flow sheet, we have a significant amount of indicated resource. We're at a point now where, we can start to think about putting feasibility studies together. This is just an example that shows sections of the ore body, and there you can clearly see the various drill holes. And if you look here on the left-hand side, you'll see the key that we use. So the sulfur and the nickel ratios, and that's what those different colors show as they go through the various levels and let's say nickel grades of the ore body. So we've got about 39 individual samples at different nickel sulfur ratios from the 11 holes that we drilled through Bardwell for that indicated resource, all being composited right now, and they'll be shipped off to Coram in the next week, and we'll start that MET program in June. And actually, I'll be at the lab in June to witness that as well. There's a lot of upside exploration potential. We own a decent package of land. We know that there's nickel in other parts of our property. We want to focus on Bardwell first. Let's get that done. Let's get that nailed down with the feasibility, and then we can look at other areas later. I'll quickly touch on the gold. As I mentioned at the start of the presentation, the nickel was discovered by the team actually drilling for gold. We're in a very, let's say, I'll just move forward to this slide here. So where we're situated, we have Cote, Iron Gold, less than 50 Ks to the left of us. And then we have Young Davidson, Kirkland Lake. So we're on that Cadillac Larder fault, which, is very significant when it comes to gold discovery. So we have 1.5 million ounces at a gram per ton on our property. When I came on board, we did some metallurgical work, and I'll show you on the next slide, but we can recover 92-93% of the gold, so it's all recoverable. You'd expect that. That's what you see from all these other gold mines. As a board, we've looked at the gold, and one of the things that we want to test is the opportunity to actually sell this. We had a board meeting today, and I've been very vocal about this in presentations. So we will start a process in the coming week with a company out of Toronto, putting a package together and going through a sale process and see what we get offered for this package of gold. We see this as a great opportunity for shareholders and potential new investors as a non-dilutive capital into the company. Do the numbers, but at $15 an ounce, you could be looking anything between 15 and 25 million dollars for this package of gold in a fantastic address with huge gold mines left and right of you. So I think this is a great opportunity for the company. By September, we'll know if we've sold this thing, and certainly all the funds that come from this, they'll all go back into the ground and continue to drill the nickel. So yeah, we're very blessed and fortunate we have such a great opportunity to monetize a pretty significant asset on our property. So just looking at our milestones, when we came on board, we did the raise. We raised $11 million in July. We went and drilled the B2 and the Bardwell zones. We did the gold network. We did a lot of, let's say, flow sheet development on the nickel. Roll forward to this year, and then Q1, end of Q1, beginning of Q2. We've reported our updated resource. It's looking big. It will be big. It's a very, very, very similar ore body to Canada Nickel. Very, very similar. It's in the same address. We're starting to see very similar grades. In fact, with the drilling, we've managed to maintain our 0.27 grade that we're reporting for our updated resource. Looking forward, between now and the end of the year, we'll get the sale of the gold going. We'll commence some, let's say, pit sensitivities and optimizations. We can do that. And then running parallel to that will be all the met work. And all of that work then will feed into a scoping study that we want to commence towards the back end of Q2. And I mean, that won't take long. We're using the same engineers that Canada Nickel have used, the same labs. So I think there's a lot of good learnings from there. And I'm hoping by the end of the year, we'll be able to have some formal engineering document, scoping studies, a level higher than a PEA that 43101 talks about. So I think then we'll know exactly what we've got, what the economics are looking like, and then what levers we need to focus on moving into a PFS. So just in summary, I've discussed the board and management, very experienced, got a lot of good experience in developing and operating large mining companies, and we've done that our whole life. We've got this nickel compliant resource. It's big. It's going to get bigger. And we talk about quantity, but I think, during this feasibility phase now, we're going to focus on quality tons of nickel. We all know what Canada brings to the table when it comes to critical minerals, and certainly the state of Ontario. I think we're very blessed that we have that support from the government there. Our First Nation communities, we have a great relationship, and we will continue to develop together as we look to develop this mine. And we have this JORC compliant resource that's been independently reviewed, and we will certainly look at the opportunity to monetize that. So, Tim, in a nutshell, that is Aston Minerals, and I am happy to take any questions.
Great. Thank you, Russell, for the very informative presentation. We'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a few questions. One, looking at the potential timeline here of development, when would you see potentially, pre-feasibility study and eventually be a construction decision and so on? But when would ideally would you start looking at building a mine?
Well, okay, let's just phase this out. So, if we get a scoping study out by the end of the year, and then you will have a 3-year permitting process with public consultation, and running parallel with that will be future study work, feasibility work. So there's, 3.5 years. It's going to take you probably a 1.5 years to find the money to build something like this. That's 5 years, and then it's a minimum 2-year construction. In my mind, I think this is something that's going to be a 2030 kind of mine, 2031. So it's not going to happen overnight. This is a big mine. I mean, a mine this size will be, producing 30,000 tons of nickel for 40 years. I've worked on a mine that ran for 58 years, so I know what it takes to build these things and what they need. So it'll be a big mine. And you look at Canada Nickel's development, I mean, they're very similar as well. So, yeah, this is not an overnight process. But I guess that's the opportunity where now, we're a market cap of 15 million. As we go through these hoops, that's where now you'll start to get the let's say, the re-rating as we, tick the boxes.
Great. How is the local support for the mine, and are there any environmental issues of concern?
So I think, we've been doing a lot of drilling on site. So we have environmental procedures when it comes to moving rigs around and getting permission from our First Nation groups. In terms of the, let's say, all the environmental work, that's going to be scoped out later this year. We do have a very good relationship with both First Nation groups on the property, and I know that they'll be part of the process of putting that environmental plan together. But as it stands today, with the operations that we do on site, we follow all environmental procedures required. We've had no issues with anything. And again, because we're in the Timmins area, there's such a good let's say, example of what needs to be done for explorers, developers. We just follow the letter there. There's nothing going to be reinvented here at all. So no, we've had no issues to date. Nothing.
Great. Shifting to the gold side, as the gold has been drilled about 2 kilometers of a 10-kilometer potential strike length, is there the potential for more gold? Seems like it, but would that be in the negotiations for a potential deal on the gold side?
Look, I mean, for me, I would say you can only the blue sky is your decision, right? What we can give is the evidence of the drilling that we've done. We can show how the resource has been put together. We've got a very good, experienced team that have put this gold together. It's been independently reviewed. So I would say to any potential buyer or interested party, that's what we can offer you. Can we tell you that there's more gold to the left or the right or deeper or, I don't know. We haven't done the work. So I guess I look at this gold and no one's going to move in there and start mining tomorrow. But there's been over 100,000 meters of drilling done. There is a JORC compliant resource. It's a fantastic, let's say, starter opportunity, I think, for a major to come in, drill, and not even build a mine. They just mine the ore and ship it to their mills. Because as you know, there's mills left and right of us anyway. So yeah, I mean, that's really where I think this gold sits. But look, in this type of environment, in this region, you drill, you're going to find gold. It's as simple as that.
Great. One always popular question, what is your current cash position and how far will that get you with your current plans?
So that was on the slide about our corporate snapshot. In our quarterly report, we announced we've got $5.1 million. I get the cash every week. We've still got 5.0 something as of yesterday. If you look at the spend that we're going to do between now and the end of the year, we've got met work, we've got a bit of pit, let's say sensitivity work to do, optimization, and then the scoping study. There's no drilling being done this year. We don't need to drill. And to be honest with you, if someone gave me $30 million today, we wouldn't know where to drill. We have to do this met work first, because the met work will feed back into the ore body. And only then when we see that and we understand which areas gives us the best recoveries, then that's obviously the focus points for drilling. So we won't do any drilling this year. I've come from an operational background. I know how hard it is to get money. And I know how hard it is then to make sure you spend it correctly. And that's what we've been doing and will continue to do. And with the board and myself, I think it's important that people understand we're responsible people. We work for shareholders. It's not our money, it's shareholders' money. And we have to manage it accordingly. So I just want people to understand, and I've had this discussion with a lot of my Australian investors, and people get it, right? We're not here to fly around the world and go to conferences. That'll come. But what we need to do is get our head around the technicalities of what this ore body can deliver. And that's where the money's being spent. And it gets spent at the appropriate time. We won't put another rig on site now until all of this met work has been done. And to be quite frank with you, if you want to torch money, put a rig on site, because you're going to just be burning money every second of the day. So when you put a hole in the ground, make sure you've got it right. We don't have money to waste. So yeah, we don't need any money this year. At the end of this year, we'll still have $3 to $3.5 million. And that will even keep the company going next year if we don't drill. If we sell the gold and we walk out with $15-20 million, that'll keep the company going with drilling for at least the next 2 years. So that's why the gold is so important, that we can try and get a sale on that. But yeah, we won't be doing any raises this year, not at all.
Okay, great. When looking at potentially the development work, do you have any information on where processing water would come from, and what kind of water permits would be needed in that region?
Okay, so I mean, and excuse my ignorance, but when I fly into Timmins, I think the one thing that we're not short of is water. There's plenty of water in Canada, so that's hence the hydropower. So that's the first thing. I think, look, we'll get into all of that. I don't know. There'll be a time and place that we'll have to understand the waterways, where we get our water from, you know, where we dispose of tailings, how we recover that water back. And then obviously you've got the issues with winter and this kind of thing. So we'll get into all of that. But as I say, there's a multitude of large mines operating in that area. We're not going to reinvent any wheel. We're going to take that print and we're going to say, well, that's what we have to do on our mine. And that's what we've done on all of the mines that we've operated and developed as well. There's a way to do it, and that is the way to do it. It's as simple as that. It's not Russell's way. It's what does Ontario want, and then that's how we do it. That's what miners have to do. We're in somebody's backyard. We have to comply with what the backyard wants, right? That's it.
Great. One question here. Obviously, the focus has been on the nickel deposit and potentially doing something else with the gold. But given the strong gold price environment, we did have a question: would it be better to drill the gold deposit at this point instead of focusing on the nickel?
Look, it's a good question, and don't forget the last thing that the management team did. We built a gold mine in Ghana. A 5 million, it was a 3.5 million ton a year gold mine, 240,000 ounce CIL plant, and we expanded it to 5 million ton. It's a big mine. So we know gold well. We're going to go through this sale process. Let's see what we get offered. It's a great time to sell gold with the gold price where it is. I guess my view on it, I'm not sure about the support and the love you will get if you're a gold developer in Canada compared to a critical minerals nickel developer in Ontario. I think I would be able to be heard and be part of the, let's say, Ontario future development, economic development, much easier if I was a nickel producer and not a gold producer. And the one thing that I can only do on the gold, because I've done the test work, I know it recovers. Honestly, I'll pull a design out of that cupboard for you, and that's it. But we have to drill. And if you're going to drill, we've got to go raise money. And we don't want to do that. So it's a very good question, but I think it's important we understand what we could get for the gold. I think, will we sell the gold in its entirety? Probably not, no. So we'll always have a hook in through a royalty or a part ownership or something like that. So we'll still have exposure to the gold, but I think to just solely go and develop that and park the nickel, I think you've just got to be careful not chasing flavor of the month, because that just bites you, right? You know, what is your strategy? Stick to it. These commodity cycles, they turn. I've seen nickel turn at least twice in my career, and it's going to turn again. And I think it's going to turn soon, because I'm hearing people like Rick Rule, I want to find a nickel project. I'm seeing what's happening in Ontario with all the battery, those slides there. The nickel industry in Canada, without a doubt, is going to turn, and it's already turning. So let's just be careful sometimes what you wish for, because you could end up just, oh, well, let's move there, and you got to pick your fight one day.
Great. And we have one question, often popular, but anytime I have shareholders, I love to see the share price go up. One question: market cap isn't currently reflecting the value of what you have. Why do you think that is? And what do you see?
We know that. We know that.
And
we discussed it today at the board. And to be honest with you, the issue we have with Aston, the majority of my shareholders are Australian. So let's look at the nickel environment in Australia. We've had 4 large nickel mines closed down in the last 8 months. Close, like cheerio, like that's it. Let's close up, right? The nickel, and we've had BHP openly say we are reviewing Nickel West, 100,000 ton a year nickel business, which is a massive contributor to employment here in West Australia. So as Australians, we listen to this and we hear this, and it's in front page of the paper. People talk about it daily, the nickel business, the nickel industry in Australia. Well, when people hear what's going on in Indonesia, and I won't mention, but like 2 big institutions last year just dumped my stock. They sold the stock. It was like, we don't care. We're $1 billion institution. We just go off and buy something else because we're making plenty of money somewhere. So so what happens is the stock just goes down and down. Mums and dads read the front page of papers. The stock just goes down and down and down. And I'm trying to convince people that, well, hold on a minute. Canada Nickel's a $300 million market cap, have 3 strategic investors, Agnica, Eagle, Samsung, and Anglo American on their register. Mark's doing a fantastic job. Here in Australia, people don't even know Canada Nickel are. They haven't even heard of them. And they don't want to. And when you start talking about 0.23 nickel, I'm sorry, we can't make 2% nickel work in West Australia. That mine's closed. How are you going to make that work in Canada? But that's a separate argument about how we operate mines in Canada and why they do work. But that's what we've had to face. That's been our problem. When I go to Canada and talk to an audience, probably like I'm talking tonight, everybody gets bulk mining. Everyone understands these grades. The grades are different in Canada. It's a bulk tonnage game. And a lot of the gold mines are like that in Canada. So a lot of investors in Canada understand it. Here in Australia, it's a very different audience. And we know, we've done a comparison of our share register. We know who's gone. And people have just said that Canada, low grade, and nickel, I'm gone. Cheerio, goodbye. I'll go off and do something else. Go find a uranium stock and make a quick buck. So that is essentially what's happened. But it's fine, because you know what? I know the register will start to change because we are in development now. And I think the feedback I get from people who listen to our presentation, listen to the technical work we're doing, and understand the experience and understand where we've come from, are actually starting to say, actually, these are the guys, and nickel's on the nose at the moment. Well, actually, that's the time to go and invest in these type of projects when they significantly undervalued. Well, I mean, we as a board, we just say, Canada Nickel, $300 million market cap. A very, very similar project to us. Next door, we are $15 million market cap. 20 times difference. Well, we're ASX. Canada Nickel's TSX in Canada. We're a project in Canada, but ASX listed. I think that's been a big contributor. And
we did have one follow-up question, maybe one final question here, but following right up on that, would you consider a Canadian listing at some point?
I think at some point. I mean, as I say, with Mantra, with Lionel, and with the same. There was a lot of dual listing in those companies, and there's a time and place for it. Not now. We don't need it now. I mean, people can buy stock. We've got an OTC listing, so it's easy to buy in North America through OTC. People can buy ASX. I can phone my broker tomorrow and buy TSX. It's pretty easy. There will be a time and place that we will do that, and I think that's probably in 2 to 3 years' time. But as it stands today, this year, let's look at our treasury. Let's look at the money we've got. To dual list does cost money. I don't want to spend money on that at the moment. But yeah, there will be a time and place for that, without a doubt.
Okay, great. Great. Well, I think that's all the time we have today. I would like to thank Russell Bradford for presenting today, and thank you everyone on the line for tuning in. Please join us next Tuesday when our Red Cloud webinar series continues with Clean Air Metals presenting Tuesday, May 21st at 2 p.m. Eastern Time. Have a great rest of your day.